Good morning, traders. It's 8 a.m. Chicago time, 9 a.m. Eastern on Wednesday, the 21st of March, 2018. Thanks for joining me again for another Trader Bite. Couple things to go over this morning, important things. First of all, derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance this morning, pretty much a mixed bag. We have the Euro stocks and the DAX lower. The Nasdaq's down 22 points or 0.32%. The market looks like it's allocating to safety, gold being higher, $7 or 0.5%. British pound is stronger on some numbers, Euro FX as well, and the Japanese yen. The treasuries in the US dollar are down, but again, the most important factor today is the FOMC. FOMC is expected to announce their decision at 2 p.m. Eastern, and the expectation is for a 25 basis point hike by over 90% consensus. So that's what we're looking for. We're looking for some fireworks this afternoon in the markets. Let's take a quick look at what we expected yesterday. Yesterday, the primary scenario is exactly what happened. We expected a market that was mostly balancing and with a potential test down to the 12.5 stock zone. Expected the market to get tangled in the 22 area, turned out to be 20. And to test all the way up into 27.30, it got to 27.75 or so. So missed it by about 2.25 points and finished in the middle. I won't go over the other scenarios just to save time, but this is what we saw. There it is, back and forth. The stock zones have moved a little bit because in preparation for today's trading, but overall, we ended up shifting down into 1275. 1250 was a stock zone. This stock zone has not moved. And we've pushed back up into the high of the session around 27.75. So what did we accomplish yesterday? Just as expected, a Gaussian or balanced profile and the market being stuck in the middle. Notice the point of control, open, VWAP, mid, all in the same spot. Complete balance. All right, so that's that. Let's look at the overnight session. The overnight session, again, a retest of yesterday's high, 27.2775, and spent most of the session just trading around the 22.20 area. Point of control, again, at 27.20. We had a fast drop at 7:45 Eastern, 6:45. That's on news from China regarding tariffs. It was a quick 5-point drop. The SOC for that, or the scene of the crime, was 22.50. That's where the auction got interrupted, and we are basically drifting back up there now. No real insight from the overnight session. The volume's 120,000, which is in line with what we would consider to be common. So nothing to gain from the overnight session, except that there was no real price discovery, no real participation. While we're at it, I want to take a moment to look at the weekly. So what I did is I collapsed. We've been trading inside of the week of the 5th of February, the big sell-off, and we've been balancing inside there. Yesterday's session, we closed right there. The point of control, if in the traditional market profile TPO and in volume, is around 27.20. Does that number sound familiar? We tapped and snaked around that price all day yesterday. and that's basically the most traded price since the February drop. We're completely imbalanced. We have a low volume node up here at 27.45. We have a low volume node down at 26.90 or so, and then we are stuck in the middle with you. And so when we split up this profile, oh, that's not what I wanted. We want to remove splits and merges, I think. Yep. When we break this up, we notice that so far on Monday, we just tested below. Yes, yesterday's value area is very valid. We tested the last week's low on Monday and have been holding below the gap from the week before. So we are just testing and retesting this area. Notice we pushed down into the single print down here. This is also a low volume node here. And we're holding steady. So the market's in a holding pattern. Why is it in a holding pattern? Again, big announcement today, FOMC, and I'm expecting the market to tip fairly strongly once we get that announcement. So that brings us to what's the trade likely to be for today. Let's turn off these things and shift over. Before I get into that, last reminder that we have a webinar today. Really important conversation, I think. I've prepared some great questions for Anthony to discuss. It's more of a panel discussion. It's not a lecture. We're going to talk about his background. We're going to talk about what he looks at, what he's trading. Anthony's been trading for about 19 years and is very active still. And then the things that I really focused on is, what does it take to be a career trader? So convergent trading was built around that. Our main focus is creating kind of the ultimate opportunity for traders to trade as a career. So all the tools and virtual tools and an approach that I would use for backing a prop trader, we're making that available to traders who are serious. And so I'm going to pick his brain a little bit about what kind of person he would back, what kind of process he would follow for the person he's backing, what's the expectation of returns. We're going to talk about crypto a little bit. He's been trading crypto for some time. Please sign up. The link is right in the description of the video for your convenience, so grab it there. What are we expecting for today? So here we have a completely balanced profile, still trading 27.20, 27.20, 27.20. High volume price here. And we're opening right in the middle of value, right in the middle of the range. And I'm expecting a very choppy open, mostly chop today. I'm expecting this to, it had two tests into the 1250 stock zone below, could not get into this area from the sell-off day on Monday. So I'm expecting this to be done and to push up higher. I'm expecting this to break, and I'm looking for it to balance in here before the FOMC. So again, the plan for FOMC is you split the day. So we use the context before us to figure out the morning. So I'm looking for a completely balanced market with an upward skew, if there is a skew. So that's what I'm drawing here. And then from here, it could be higher. We could blast right up to the 45 from here, or drop right into the 26.90 or below from here. There's just no way for me to tell. It just depends on what the FOMC does. Again, the expectation is for a 25 basis point hike. I'm not an analyst, but what am I expecting if they hike 25 basis points? I expect the market to drop quickly and then for the traditional or the overwhelming trend to take back over, which is to rise. So I'm looking for the market to initially drop, but I'm looking for the main trade of the day, to be to the long side. If they don't hike, then it's probably not going to drop. It's going to pop very quickly, and we're looking at a quick run, potentially all the way up to 2750 and beyond. 2750 and 27 and beyond there. There are many levels up there. The probability that we would drop would come in if they release hawkish comments despite the hike. They may release hawkish comments that makes the market think that there are many more hikes coming this year, as opposed to pausing as they're expected to do until later this year. So that could really drive us down. So there's not much to do this morning. Be careful. The opportunity is not at the FOMC release. The opportunity is after it. After the market picks a direction, once the release is out. Okay. So if you go in there and you're at your limit, or if you've lost half your limit, or you've just blown up your account before you went in there because you're just splashing around, then you're not going to be able to participate. In the end, we trade volatility. That's what we do. We're looking to trade volatility. Price change is what pays the bills. Okay. So it's best to pause and be very, very picky before the FOMC. I know I will be. And then once the FOMC comes out, then we're looking for the move to happen. And then you just pay attention. The FOMC usually releases in a three move pattern. So you get the initial move, then you get a whip, and then you get the continuation move. And this is the move that I generally look to catch once it starts to turn. But lately it's whipped, and then it starts to just kind of squeeze in a direction. So what I've done lately is to hold off until the three wave pattern finishes, and then hop in. I'll leave you with that. My time is up. Again, please take a moment. Again, the link for today's webinar at 4:30 p.m. Eastern U.S. time. The link for it is in the description. Just click and register. Again, once you register, your name is not going to be sold, spammed, or anything like that. But it will, even if you cannot attend, register so that you can be sent the video recording once it's done. Good luck.